Hi everyone, this is CA Aishwarya from Clear Tax. So as I can see, people are still joining. So what we'll do is we'll wait for 5 more minutes, and at exact 4:05 we will start the session. Hi everyone, good evening. This is CA Aishwarya, as I already told. So just give me a thumbs up if you can hear me and also see my screen. Give me a thumbs up, or if anyone can unmute yourself and tell. Yes, okay, fine. So we will start the session. I guess people are still joining, so let them join. So we will start the session. Yes. So yeah. So first and foremost, I would like to welcome all of you to today's webinar, so which will be all about ITR filing made easy and also how you can navigate this tax season with a confidence. So the main motive of this webinar is two things. First thing is for the year gone by for which you will be filing your income tax return. So for this year, we will tell you which regime may be beneficial for you. Either it is old or new regime. And also, if you want to file your income tax return using our ClearTax website, then how can you go about it? So this is the first part of the webinar. Second part, we will also talk about for the upcoming years, how you can do a tax planning. So in this, basically, we will be discussing about the various expenses and investments that you can make to take a deduction under Income Tax Act. So without wasting any further time, let's get started with the webinar. So first, before we move ahead and get into the actual content, I would like to give you agenda of today's webinar. So first, we will be taking up various expenses that are eligible for deduction under Income Tax Act. Moving ahead, we will also see various investment options that we have that you can make under 80C to claim the deduction. Apart from this, we will also see few pension products that are there in Income Tax Act, and also we will see other deductions that are above and beyond your 80C and also pension product. So in this, basically we have sections like 80D, 80DD, 80G, etc. After that, we will also see what are the documents that you should keep handy, that you should keep in mind while filing your income tax return every year. And also we will discuss various mistakes that are done by the clients that you should avoid while filing your income tax return to avoid any scrutiny notice or defective return notice. And as I already said, we will see the highlights of new regime. What are the highlighted points of new regime for assessment year 24-25? And we will also do a comparison between old and new regime by seeing various slabs that are there under both the regimes. And we will also do a comparison with the help of numbers. So we have taken two numerical examples to make you understand which regime may be beneficial for you. And after this, I will give you a walkthrough of ClearTax filing. That means if you want to file your income tax return using our ClearTax website, then how can you go about it? What are the various steps involved and how easily you can file your return? And also towards the end of the session, we will have dedicated 5 to 10 minutes of Q&A, wherein you can pitch in your questions by either unmuting your mics, or you can simply put those questions in chat box or Q&A section. But I urge all of you to not ask your questions by unmuting your mics in the middle of the session, as it may interrupt the whole flow of the webinar. So what we will do is, we will have this towards the end. Don't worry, all your questions will be answered. So having said this, let's get started with the main content. So as I was already telling you, first we will be discussing about the expenses that are eligible for the deduction. So these are some of the allowance that you will be receiving as a part of your salary for which you can claim deduction. So in this, first we have HRA. So HRA stands for house rent allowance. Now, if you are living in any rented premises, in that case, you can claim HRA. But in order to claim this HRA, there are few criteria that you need to look into, and least of these three criteria will be allowed as your exemption. So now in order to claim HRA exemption, we have three criteria, and least of these three criteria will be allowed as your HRA exemption. So now let's see what are these three criteria all about. So first criteria we have either 40 or 50% of your basic salary. So now why did I say 40 or 50% here? So please note that if you are a person who is residing in any metropolitan city. So here by metropolitan city, I mean Chennai, Mumbai, Delhi or Kolkata. So now if you are a person who is residing in any of these four cities, in that case 50% of your basic salary becomes the first criteria. But if you are a person who is residing in any other cities apart from this four, in that case 40% of your basic salary becomes the first criteria. And for the second criteria, you need to take whatever actual HRA that you have received from your employer. So that becomes your second criteria. And for the third criteria, you need to deduct 10% of your basic salary from rent paid to landlord. So now first what you will do is you will take whatever rent you have paid to landlord in a year, that you will take from this, you will deduct 10% of your basic salary. So remaining whatever amount will be there, so that will be our third criteria. And least of these three criteria will be allowed as your HRA exemption. So now let's understand this with the help of numbers. So now let us suppose say your basic salary is 10 lakh. And I presume that you are a person who is residing in non-metropolitan city. So in that case, 40% of your basic salary, that is 40% of 10 lakh in our example, becomes the first criteria, which is coming to rupees 4 lakh. Now, for the second criteria, let's assume that the actual HRA that you are receiving from your employer is 5 lakh. And for the third criteria, let's assume that actual rent paid minus 10% of your basic salary is coming to 3 lakh. So now we have three figures here. First one is 4 lakh, second one is 5 lakh, and third one is 3 lakh. So now least of these three criteria is 3 lakh. So now 3 lakh will be allowed as your HRA exemption. So now if you see, the actual HRA that you received from your employer is 5 lakh. But in this, only 3 lakh was allowed as your exemption. So now whatever remaining 2 lakh is there, so this will be your taxable HRA. That means this will be added to your salary and this will be taxed. But this 3 lakh will be allowed as your HRA exemption. But one point to be noted here is this HRA exemption is allowed only under old regime. That means if you want to opt for new regime, in that case, HRA exemption will not be allowed. So this was about the HRA. The second expense for which you can claim deduction is housing loan interest. So now if you have taken any housing loan and if you are repaying any interest on the same, so that can be taken as deduction under section 24B of the Income Tax Act. But again, this section has a maximum limit for which you can claim this deduction. And this is set up to a maximum limit of rupees 2 lakh. And this will be subject to actual payment only. That means in whichever year you're making this payment, only in that case you will be allowed to take this exemption. But this will be allowed only for 2 self-occupied house properties. That means let us suppose say if you have 3 self-occupied house property and for all 3 of them, if you have taken any housing loan and you are repaying interest as well. In that case, only for 2 self-occupied house property, you can claim this deduction and this will be at a maximum limit of rupees 2 lakh. That means for both the houses, let us suppose say if you are paying rupees 4 lakh as the interest repayment, but only 2 lakh will be allowed as your exemption and not 4 lakh. And the next point to be noted here is for housing loan interest, that this deduction will be allowed only from the year of the possession. That means let us suppose say you took your housing loan and also you started repaying interest from the year 2020. But you got the possession of your house from the year 2024. So in this case, what will happen is whatever interest that you are repaying from 2024, so this will be allowed as your deduction. But what about the interest that you paid from 2020 till 2023? So don't worry, this is also allowed as your deduction, but this will be termed as your pre-construction interest. And this pre-construction interest will be allowed as your deduction in 5 equal installments starting from the year of the possession. That means let us suppose say from the year 2020 till 2023. So before you got the possession, you paid 5 lakh as your interest repayment. So now what you need to do is you need to divide this 5 lakh into 5 equal installments. So if you divide this 5 lakh into 5 equal installments, this is coming to 1 lakh. So now this 1 lakh you can start claiming as your interest reduction from the year of the possession. That means as I already said, from the year 2024, you got the possession of your house. So now what you can do is you can start claiming this 1 lakh from the year 2024, and this you can claim up to 5 consecutive years. That means till the year 2029, so you can claim this deduction so that your pre-construction interest is set off. So this is about the housing loan interest. Again, this is also allowed only under old regime. Now there is a common point that is applicable to both HRA and housing loan interest. And that is, as a thumb rule, you cannot take both HRA exemption and also housing loan interest deduction together in a year. Because as the name says, that house rent allowance you will get if you are staying in a rented premises, and this housing loan interest, if you are claiming for a self-occupied house property, that means you already own a house. So this is a contradiction. So in this case, you cannot claim both HRA exemption and housing loan interest together in a year. But again, there are few exceptions to this. First being, let us suppose say you stay in city A. That means you have your self-occupied house property in city A for which you have taken a loan and you're also repaying interest. But because of your employment purpose, you were supposed to move to city B. So here in city B, you took a rented premises for which you want to claim HRA. So in this condition, both HRA for your city B house and also for city A house, you can claim housing loan interest reduction. So this is one of the exception that is there, for which you can claim both HRA and repayment of interest together. So this was about the first slide. So this was about the two expenses that you can claim deduction for. So we have other expenses as well for which you can claim the deduction. So in that third, we have leave travel allowance. So this is popularly known as your LTA. So now if you have traveled in a year and if you have incurred any cost for your travel, so that can be taken as your LTAs. But this LTA is allowed twice in a block of a 4 calendar year. So now please note that to claim this LTA, Income Tax Act follows a block system. And each block comes with the 4 consecutive years. And the current block that is applicable for us is 2022 till 2025. So in this 4 years, you can claim LTA twice. But now let us suppose say, if there are any unutilized LTAs, that means from the year 2022 till 2025, if you couldn't utilize 2 LTAs, then what you can do is you can carry forward this to the first year of the next block. So for us, next block will be from 2026 till 2029. So what you can do is, if there is any unutilized LTA, so you can carry forward this to the first year, that is to 2026 year only. And after that, if you have taken any travel in the year 2026, at that time you can utilize this LTA. And one more important point to be noted here is, to claim this LTA, you need to travel domestically. That means within the territory of the India. So if you want to take any international trips, for that you want to claim LTA, then that is not allowed. Only if you are traveling within India, so that can be taken as your LTA. And also while traveling, you can accompany with you your spouse, your dependent children, parents or siblings as well. And also only the cost of travel, that means only travel tickets can be claimed as your LTA. If you are incurring any food expenses or any boarding, lodging while you are on your travel, so that cannot be claimed. Only the travel tickets can be claimed as your LTA. So this was about one of the other expense for which you can claim deduction. Again, this LTA will be allowed only if you are opting for old regime. So the last type of expense that we have covered here for which you can claim deduction is your food expenses. So this is popularly known as your food coupons, Pluxee or Sodexo, by whatever name it is called. But this is basically to reimburse your food expenses. But again, Income Tax Act sets a maximum limit for which you can claim this expense. And this is allowed up to a maximum of rupees 26,400 per annum. So now let's understand how this 26,400 per annum has been arrived. So as per the Act, you are allowed to take 2 meals of 50 rupees each. So this is coming as rupees 100 per day. And this will be for 22 working days. So now for a month, you will have this food coupon as rupees 2,200 per month. And if you multiply this by 12 months, you will get rupees 26,400 as the maximum limit for your food coupons. Again, this is also allowed only under old regime. So now this was about the few expenses that you can claim as a deduction. So we discussed about HRA, we discussed about LTA, food coupons, and also housing loan interest reduction. So now let's move ahead and see what are the investment options that we have under 80C. But before we deep dive into the investment option that we have under 80C, there are 2 common points that will be applicable for all the investments. First, all this investment that I'll be discussing with you that you can make under 80C, these are allowed only if you are opting for old regime. And the second point is the umbrella limit. That means all these investments under 80C, all these investments put together, the maximum deduction that you can take in a year is limited to rupees 1.5 lakh only. So having said this, let's discuss about the investment option that we have under 80C. So first we have PF. So PF stands for Provident Fund. And under PF also we have 3 categories, 3 main categories. First we have EPF. So EPF stands for Employee Provident Fund. So this PF is nothing but the PF amount that will be deducted from your salary every month by your employer, and this will be deposited to your PF account. And the second type of PF that we have is VPF. So VPF stands for Voluntary Provident Fund. So VPF is merely an extension of EPF itself. The only difference that we have between EPF and VPF is This voluntary provident fund does not come with any limitations. That means what you can do is you can contribute 100% of your basic salary to VPF. And VPF comes with a lock-in period of 5 consecutive years. And the third option that we have under PF is PPF. So PPF stands for Public Provident Fund. So here the main difference between EPF, VPF and PPF is EPF and VPF can be taken only by a person who is employed in any organization. But if a person who is not employed in any organization, let us suppose say if he is a self-employed. So in that case, the only option that he will have if we want to invest in PF is PPF, Public Provident Fund. So now under PPF, you can invest either in the name of yourself, your spouse, or your child as well. But the important point to be noted here is under PPF, PPF comes with a lock-in period of 15 consecutive years. So now this is the major drawback with the PPF. But if you are looking for a long-term investment option, in that case, PPF becomes the attractive option. So now this was about the PF. The second investment option that we have under ATC is life insurance premium. So now if you have taken any life insurance policy and for the same, if you are paying any premium, so that can be taken as deduction under ATC. But please ensure that you are taking this policy from an approved insurer only. So here by approved insurer, I mean insurer approved by IRDAI. So if you are taking any insurance from approved insurer, in that case, you are good to go. You can take this deduction under ATC. And this life insurance policy can cover either your own self, your spouse, or your children as well. So this was about the life insurance premium. The third type of investment option that we have under ATC is ELSS. So ELSS stands for Equity Linked Savings Scheme. So this is nothing but tax saver mutual fund. And people nowadays are considering ELSS as the best investment option. So here, in order to take deduction under ATC, you need to ensure that you are taking ELSS that is coming with a lock-in period of minimum 3 consecutive years. Only in that case, you will be allowed to take deduction under ATC. And also ELSS offers you 2 investment options. That is, first, you can either take up SIP, that is every month you'll be contributing to ELSS. Or if you have money, in that case, what you can do is you can also take up a lump sum plan as well. Now, one important point about ELSS is whatever capital gain that you will have on the maturity. So here by capital gain, I mean whatever the maturity proceeds you will have. So from this, if you deduct all the investment value that you have done for that particular plan, so now whatever amount is remaining, if it is a gain, in that case, whatever this capital gain is there, in that you need to pay tax. There is no tax exemption on the same. So this was about the ELSS. The next investment option that we have under ATC is your housing loan principal repayment. So now if you remember in my previous slide, I was discussing about the housing loan interest component. So now here we will be discussing about the principal component. For this housing loan principal component, you'll get a deduction under ATC. So now whatever principal repayment that you would have done on housing loan, so that can be taken as deduction under ATC. But this deduction will be allowed only from the year of the possession. That means in my previous example, as I was telling, if you got possession of your house from the year 2024, so now from the year 2024, whatever principal repayment that you are doing, so for this you can claim deduction under ATC. But before taking the possession, if you are repaying any principal, so that cannot be taken as deduction here. And also if you have paid any stamp duty or any registration fees for purchasing your house property, so that can also be claimed as reduction under ATC. So this was about the housing loan principal component. Apart from this, you can also invest in tax saver FDs. So now this tax saver FD can be taken from either bank, post office, or cooperative society as well. But please ensure that in order to take deduction under ATC, this is coming with a minimum lock-in period of 5 years. Only in that case, you will be eligible for ATC deduction. And also whatever interest that you will be getting on this FD, so it is taxable. There is no tax exemption on the same. You need to offer this to tax under income from other sources. And the next expense for which you can claim deduction under ATC is your tuition fees. If you have a child and for him or her, if you are paying any tuition fees, for getting him or her admitted in any school, college, or university in India. In that case, you can take deduction under 80C. But please note that only tuition fees are allowed as a deduction. If you are paying any other fee, by name library fee, donations, or development fee, so that are not allowed. Only tuition fees are allowed as a deduction. So this was about the tuition fee. And the next type of investment option that we have under 80C is Sukanya Samriddhi Scheme. So this scheme is introduced by our government of India under the initiative of Beti Bachao Beti Padhao. So as the name says, if you have a girl child, in that case, you can consider investing in Sukanya Samriddhi Scheme. But please ensure that you are starting investment in the scheme before your girl child attains 10 years of her age. Because as soon as she enters 10 years of her age, in that case, you cannot claim this deduction under Sukanya Samriddhi Scheme. In fact, you cannot even invest in this. And the maturity of this scheme will be when your girl child attains 21 years of her age. At that time, you can withdraw the maturity proceeds from this account. And the minimum investment that you need to make every year in Sukanya Samriddhi Scheme is rupees 250, and this can go up to a maximum of rupees 1.5 lakh. And partial withdrawal is also allowed when your girl child attains 18 years of her age. But please ensure that you are using this partial withdrawal amount either for an education purpose or for a marriage purpose. Now, what makes the Sukanya Samriddhi Scheme more lucrative is this falls under EEE category. That means whatever investment that you are making under Sukanya Samriddhi Scheme, so this can be claimed as deduction under 80C. And whatever interest and maturity proceeds that you will be receiving under this scheme, so this is also tax exempt. There is no tax on the same. And also, if you have a girl child, in that case, you should consider investing in Sukanya Samriddhi Scheme, as this is the most attractive option that you will have. So this was about the Sukanya Samriddhi Scheme. So now these were the few investment options that you have under 80C, which you can consider, that we have discussed in the detail. So apart from this, there are few other investment options as well under 80C that you can consider. So you can consider investing in National Savings Certificate, ULIPs, NABARD bonds, or post office deposit scheme. And if you're a senior citizen, in that case, senior citizen savings scheme is also there. So this was about the various investment options that we discussed that you can consider making so that you can take deduction under 80C. But I repeat, there are two common points that are applicable to all the investments under 80C. That is, all these investments will be allowed as deduction only if you are opting for old regime. And also the umbrella limit here for all the investments under 80C is rupees 1.5 lakh. That means all these investments put together, the maximum deduction that you can claim in a year is rupees 1.5 lakh. So now, after discussing about 80C, let's move ahead and see the pension products here. So for this pension, we have two sections. First is 80CCC and second one is 80CCD. So first we'll be talking about 80CCC. So now if a person is investing in any pension plan, annuity plan of any of LIC or any approved insurer, and this is majorly for the pension schemes. So in that case, he can claim deduction under 80CCC. Again, here the maximum deduction amount will be 1.5 lakh in a year, and this is allowed as a deduction only if you are opting for old regime. And the second type of section that we have that is dedicated for pension is 80CCD. Now, central government has introduced a pension scheme which is called as NPS. So NPS stands for National Pension Scheme. So now if a person is investing in NPS, he can claim deduction under 80CCD. Under 80CCD also, we have three sections. First is 80CCD1. So 80CCD1 stands for Employees' Contribution to NPS. So now if a person is contributing in NPS, if an employee is contributing in NPS, in that case, he can take deduction under 80CCD1. Again, this is also allowed at a maximum rate of 10% of basic salary. Apart from this, if an employee is opted for NPS, in that case, a similar matching amount is also contributed by employer to NPS. And this can be taken as deduction by an employee under 80CCD2 section. So now 80CCD2 stands for Employer's Contribution to NPS. Again, this is also allowed at a maximum rate of 10% of your basic salary, for which you can claim this deduction. Apart from this two section, we also have 80CCD1B. So now if an employee is contributing anything over and above this 80 CCD 1, so that he can claim as deduction under 80 CCD 1B. Again, this is also allowed at a maximum limit of rupees 50,000. So now please note that 80 CCD 1, that is employees contribution to NPS, and 80 CCD 1B, that is additional contribution to NPS. So both this are allowed only under old regime. But 80 CCD 2, that is employers contribution to NPS, this is allowed at both old and new regime. So now let's discuss about the overall limit that we have here. So first is 80C, that means all the investment option that we have under 80C, plus 80CCC, that is your pension plan, plus 80CCD1, that is employees contribution to NPS. All these three put together, the maximum reduction that you can claim in a year is rupees 1.5 lakh. And in addition to this, you can also claim 80CCD2, that is employers contribution to NPS, up to 10% of your basic salary. And in addition to both of this, you can also claim 80 CCD 1B, that is additional contribution to NPS, up to a maximum of 50,000. So this was about the overall limit that we have. So now after discussing about 80C and pension section, let's go beyond 80C and see what are the deduction that we have apart from this 80C, which are beyond this 80C under Income Tax Act. So in this, first we have 80D. So now if you have taken any medical insurance policy and if you are paying any premium on the same, so that can be taken as deduction under 80D. And this medical insurance policy can cover either your own self, your spouse, your dependent children or parents as well. But this is allowed only if you are opting for old regime. So now let's discuss about the maximum limit that we have under 80D. So this is dependent on the age of the person for whom you are taking this insurance policy. So if that person is a non-senior citizen, that means he is of less than 60 years age, in that case 25,000 becomes the maximum deduction amount. But if that person is a senior citizen, that means if that person is of age either 60 years or more than that, in that case 50,000 will become the maximum limit. And if you have taken any preventive health checkup, for that also you can claim rupees 5,000 as the deduction amount. But please note that this 5,000 is already included in the limits of rupees 25,000 or 50,000. So this 5,000 is not over and above that. So it is already included in the overall limits. And one more important point to be noted here, if you want to claim deduction under 80D is, you need to pay this premium in a mode other than cash. That means you can make this medical insurance premium payment either through an online mode or through a check. But if you are doing it via cash, in that case, this is not allowed as a deduction. But for this preventive health checkup, you can claim, you can incur this expenditure in cash. There is no restriction on the same. If you are incurring it in cash also, then also this is allowed as your deduction. So this was about the first part of the 80D. We have second part also for 80D. That is, you can claim deduction for the medical expenditure. But in order to claim this deduction of medical expenditure, there are two conditions that needs to be satisfied. First thing is, for the person for whom you are incurring this medical expenditure, that person must be a senior citizen. And also, he should not be covered under any medical insurance policy. So if these two conditions are satisfied, in that case, you can claim deduction of medical expenditure under 80D. Again, this is also allowed at a maximum limit of rupees 50,000. And this is also allowed only under old regime. So this was about the 80D. Apart from this, we also have section 80DD. So now if a person is maintaining differently abled dependent on him, in that case, he can claim deduction under 80DD. And the maximum amount that you can claim as 80DD deduction is depending on the percentage of the disability from which that person is suffering. So if that person is suffering from disability between 40 to 80%, in that case, he can claim deduction, a flat deduction of rupees 75,000. And if that person is suffering from disability of greater than 80%, in that case, rupees 1.25 lakh will be the limit. So now this dependent can be either the person's spouse, parents, siblings, or children as well. So now Income Tax Act gives a list of the differently abled person for whom you can claim this deduction. And now we have covered a few examples here, like if that person is suffering from blindness, autism, locomotor disability, hearing impairment, etc. So now what you need to do is, if you want to claim reduction under 80DD, first it is advisable to go and refer act whether that particular disease is covered under this particular section or not. If it is covered, then you are good to go with the deduction here. So this was about the 80DD, and this is also allowed only under old regime. So as a mirror section, we also have 80U. So under 80U, 80U talks about what if that person himself is a differently abled person. So if that person himself is a differently abled person, in that case, he can claim reduction under 80U. And here also we have flat deduction of rupees 75,000 or 1.25 lakh depending upon the disability. And this is same as what we discussed for 80DD. So having discussed about 80U and 80DD, so let's move ahead and see about 80DDB. So now if a person is taking any medical treatment, either for himself or his spouse, children, dependent parents or siblings as well, for getting them cured or treated from any specified diseases. Again, Act gives a list of specified diseases here, and we have covered a few. So if that person is suffering from Mendelian cancer, dementia, Parkinson's, AIDS, in that case, he can claim reduction under 80DDP. But please ensure that you are taking a prescription or a certificate from the doctor from whom you are getting this disease treated, because this becomes the most important document to claim the reduction. And also, if you have received any amount from any insurer or employer for this treatment, that needs to be excluded here, and after that you will be allowed reduction under EDD. So now let's discuss about the amount of reduction that you'll be getting here. So first you need to take 40,000 or the actual expenditure. So whichever is lower, the lower of these two will be allowed as your exemption under 80DD. But if that person is a senior citizen, that is for whom you are taking this medical treatment, if that person is a senior citizen, in case either that or the actual expenditure. So whichever is lower with the reduction amount. So this was about 80DD, and this is also allowed only under old regime. So this was about 80DDB. So moving ahead, we also have section 80E. So now if you have any educational loan and if you are repaying interest on the same, so that can be taken as reduction under 80E. But again, there are few conditions that needs to be satisfied here. First is this educational loan you must have taken from a financial institution or any approved charitable institution only. So now if you have taken any loan, any educational loan from your friends, family, and if you are repaying them back, so that cannot be taken as deduction here. And also this educational loan must be for a higher education. So here by higher education, I mean if you are doing any study after clearing your senior secondary examination, so that will be termed as your higher education. And this higher education can be either for your own self, your spouse, your child, or for a child for whom you are a legal guardian. So for any of this person, if you are taking this higher educational loan, then you can take this deduction under 80E. And also there is no maximum deduction limit that is given under the Act for 80E. So that means whatever interest that you are repaying in a year, whole of that amount can be taken as deduction under 80E. So this was about section 80E. Again, this is also allowed only under old regime. So after this, we also have section 80EEA. If a person has taken a housing loan under affordable housing scheme. Again, this is the scheme that is introduced by our government of India. So now if a person has taken any housing loan and if you are repaying any interest on the same, so that can be taken as reduction under 80EEA. But again, there are few conditions here that needs to be satisfied. First thing, this loan must be taken from a financial institution, and that too between a time period of 1st April 2019 till 31st March 2022. And also the stamp duty of the house property for which you're taking this loan, it should be either less than or equal to 45 lakhs. If you satisfy these conditions, then you can take reduction of 1.5 lakh here under section 80EEA. So this was about the other sections which are beyond 80C. So now let's move ahead and see what are the documents. So these are the basic documents that you should keep handy while filing your income tax return every year. So first is your PAN card number or Aadhaar card number. because this too becomes the most important document. And also please ensure that you are linking both your PAN and Aadhaar card to the income tax portal in order to verify your income tax return. So this was about the first point. Second document that you should keep handy is your Form 16. So now if you are a salaried person, in that case, Form 16 becomes the basic and most important document while filing your income tax return. So if you are taking Form 16, please ensure that the Form 16 that you are taking from your employer is divided into 3 parts. First is Form 16 Part A, Part B, and also annexure to Form 16. So now Form 16 Part A basically contains the details of the TDS. So whatever tax has been deducted from your salary, so basically it will contain that detail. And Form 16 Part B contains a breakup of your salary, how much allowance you have received, what is the exempt allowance in that, and what are the deductions under ATC, ATD, and various other sections. So everything will be there in Form 16 Part B. Apart from that, annexure to Form 16. So here, annexure to Form 16 basically contains that if you are receiving a salary of 10 lakh, so in that, how much is the basic salary? How much amount is your basic salary? How much is your HRA? How much is your LTA? How much are your special allowance? So everything will be there in annexure to Form 16. So please ensure that you are taking all these 3 parts from your employer. Apart from that, please keep handy all your bank account details. So here by bank account details, I mean your bank name, account number, and also IFSC code. So this you need to enter in the income tax portal while filing your income tax return. So this basically will be there in your profile section. Apart from this, please ensure that you are downloading Form 26AS and also AIS from the income tax portal. So again, Form 26AS contains all the details of the TDS that has been done, and AIS. So here AIS stands for Annual Information Statement. So in this, all your data will be there. So here by all your data, I mean your SB interest, your FD interest, your salary income. If you have sold or purchased any immobile property, so that will be there. Your dividend income, your sale of shares, equity oriented mutual funds. So everything will be there in AIS. So please ensure that you're downloading both these documents before you go ahead and file your income tax return. After that, if you have any housing loan, in that case, please ensure that you're taking interest certificate from that bank or financial institution, because that becomes an important document to see how much amount you have repaid as interest and how much amount you have repaid as principal, because both this can be taken as deduction. After that, if you have done any investment in any of the section that I was talking about, so if you have done any investment, in that case, please make sure that you are having this tax saving receipt. That means either it can be premium paid certificate of, or if you are donating to any charitable institution, then please ensure that you're taking the receipt from them. So this was about the tax saving instrument. So whatever investment that you're doing, please ensure to take a proof from the from that institution, bank, or that donee, or whoever it is. After that, if you have any capital gain, that means if you have sold any shares, equity oriented mutual funds, or non-equity oriented mutual fund, or any land, building, house property, or for any other asset for that matter. So please ensure that you are having this capital gain details. That means you should have the sale date, the purchase date, the date of the purchase, the date of the sale. So everything will be there. And also the interest certificate. So now whatever FD interest or SB interest that you are receiving from bank, please ensure that you are taking interest certificate from them. So this was about the few documents, basic documents that you should keep in mind while filing your income tax return. So now let's discuss about the various mistakes that you should avoid while filing your income tax return, so that you should not get any scrutiny notice, assessment notice, or defective return notice, or intimation for that matter. So here, first point to be noted is you should properly select the ITR form. So now for salary individual, ITR 1 will be applicable. If you have any capital gain, in that case, ITR 2 will be applicable. If you have any business income, in that case, ITR 3 will be applicable. And if you are in any profession or business for which you want to claim a presumptive taxation, in that case, ITR 4 will be applicable. So these are the various forms that will be applicable for you depending upon your income sources. So please make sure that whatever income sources you have, a suitable form you are selecting. Because if you are selecting any incorrect income tax form that is not applicable for you, in that case, there is a high chance of getting defective return notice, So please ensure that you are taking this correct tax form. And also, I have seen many people who don't want to report their interest income from savings bank account or FDs. So this is not right, because AIS will have all the details. AIS will contain how much interest that you are receiving as your SB interest, FD interest, and also from whichever bank you are receiving. So every detail will be there in your AIS. So now, if you are not reporting this in your income tax return, then income tax department will come to know this, and there is a high chance of getting notice. So please ensure that whatever income that you have earned in a particular year, please make sure that you are disclosing all this income in your income tax return. Apart from that, if in a year, if you have changed multiple jobs, in that case, I have seen people that they will not report any one of their employer details. So please don't do this. Whatever employment you had in a particular year, please make sure that you are disclosing all this income, all the salary income from all the employers. And also, if you have any tax exempt income, there is a need to disclose this. Although there is no tax on the same, but still there is a need to disclose your tax exempt income. So here by tax exempt income, I mean, if you have any agriculture income, if you have any PPF interest, so that are all tax exempt. So please ensure that you are disclosing them, because if you are not disclosing it, then there is a high chance of getting notice here as well. So now, if in previous years, if you have received any interest on income tax refunds, so now if there is any delay by the income tax department to process your refund, in that case, they will pay you interest as well. So this needs to be shown under income from other sources. So please don't neglect to show your interest from income tax refunds. Please disclose it. And also, as soon as you submit the return, people think that they have filed the return. No, this is not the case. So once you submit the return, there is also a need to e-verify your return. So this e-verification can be done by either Aadhaar-based OTP or bank EVC or by net banking. So please ensure that you are e-verifying your return within 30 days of the submission of your income tax return. Otherwise, it will be assumed that you have not filed the return and your return is invalid. So please make sure that you are e-verifying your return. And also, as I already said, please keep whatever investment proof that you have for which you are claiming this deduction. Please keep all this investment proof handy, because if it in case that in future, if you are getting any scrutiny notice or any notice for that matter from the income tax department, you will have proof to disclose it to them. So this was about the few mistakes that you need to avoid while filing your income tax return. So now let's discuss about the highlights of new tax regime for assessment year 24-25. So now for assessment year 24-25, that is your financial year 23-24, for which you need to file your income tax return within 31st July 2024. So please ensure that you are filing your income tax return before 31st July 2024. So now for this year, a new regime will be the default tax regime. That means still there is an option for the taxpayer to go ahead and choose old regime if it in case that is more beneficial for him. But please ensure that you are making this choice while filing your income tax return or before that. And the second point that we have here is standard deduction. So now if you know that standard deduction of from salary of rupees 50,000 till now was allowed only under old regime. But now this has been extended to new regime as well. So now, in spite of you selecting either old or new regime, standard deduction of 50,000 from your salary will be allowed. Apart from this, Section 87A rebate. So now, if your income is up to rupees 7.5 lakh, and if you are opting for new regime, in that case, you don't have to pay any tax because of Section 87A rebate. And the last point that we have is the surcharge. Rather, I would say the highest rate of surcharge till now was 37%. But now this has been reduced to 25%, but this has been done only under new regime. So now if you are a person whose income is about 2 crore, and if you are opting for new regime, in that case 25% will be the highest rate of surcharge that will be applicable for you. So now these were the 4 important points that you should keep in mind. So now let's discuss about the tax slabs that we have under both old and new regime. So first we will be discussing about the old regime. So under old regime, if your income falls between rupees 0 to 2.5 lakh, in that case rate will be nil. You don't have to pay any tax. If your income falls between 2.5 to 5 lakh, in that case 5% will be the rate. If your income is between 5 to 10 lakh, in that case, 20% will be the rate. And if your income exceeds 10 lakh, in that case, 30% will be the rate. And this will be followed by a cess at the rate of 4%. And if your income is exceeding rupees 50 lakh, in that case, surcharge will come into picture at different rates. It can be either 10%, 15%, 25%, or 37%. So this is dependent upon your income. Apart from this, let's see for the new regime. So under new regime, if your income is between rupees 0 to 3 lakh, in that case, rate will be nil. You don't have to pay any tax. If your income is between 3 to 6 lakh, in that case, 5% will be the rate. If your income is between 6 to 9 lakh, in that case, 10%. 9 lakh to 12 lakh, 15%. 12 to 15 lakh, in that case, 20%. And if your income is exceeding rupees 15 lakh, in that case, 30% will be the rate. And this will be followed by cess at the rate of 4%. And surcharge will come into picture here as well. If your total income is exceeding rupees 50 lakh and there are different rates, it can be either 10%, 15%, or 25%. So this was about the tax slabs. So now let's discuss which regime may be beneficial for you, either it is old or new. So now what we have done is we have taken two numerical examples. So let's discuss it one by one. So first we have taken income from salary. We have assumed that income from salary of a person is 16 lakh. So this is same under both old and new regime. From this, we have deducted a standard deduction of 50,000. So we are having a gross total income of 15 lakh 50,000 under both the regimes. So now here we have taken deductions. So first we have taken housing loan interest deduction of rupees 2 lakh. So if you remember, for every investment, for every expense that I was discussing, I was telling that this is allowed under old regime only. So as per that discussion, we have taken housing loan interest deduction under old regime only of rupees 2 lakh. We have taken ATC of rupees 1.5 lakh. ATD, that is your medical insurance premium, we have taken at a maximum limit of rupees 50,000. We have also taken ATCCD 1B, that is additional contribution to NPS. So this also we have taken at rupees 50,000. Apart from this, we have also taken ATCCD 2, that is your employer's contribution to NPS. So this also we have taken at rupees 50,000. So all this deduction will be allowed only under old regime. But if you remember, ATCCD 2, that is your employer's contribution to NPS. So this I was telling, this will be allowed under both old and new regime. So this we have taken, this 50,000 of ATCCD 2 we have taken under new regime as well. So if you deduct all this deduction, in that case under old regime, you are having total taxable income of rupees 10 lakh 50,000. Under new regime, it is 15 lakh. So now let's go ahead and see how taxes has been computed for this income level. So if you see under old regime, total tax payable is coming to rupees 1,32,600. So you can see the calculation from this table. And under new regime, we have total tax payable as rupees 1,56,000. So now why this is happening is we have taken all the possible deduction under old regime, and under new regime, as deduction were not allowed. So what we are having is we are having more taxable income under new regime. So because of that, we are getting a slightly higher tax payable in new regime. So this was about the first comparison table. So now here we have second comparison table. So here what we have done is we have kept income from salary, standard deduction, gross total income, everything same. That is 15 lakh 50,000 under both regime. So what we have done different in our comparison two table is we have assumed that the person is not taking any deduction. That means that person is not investing at all. So in that case, his total taxable income will be rupees 15 lakh under both the regimes. So here what we have done is we have taken only ATCCD 2, that is employer's contribution to NPS. So the only reason why we have taken this deduction is this is allowed under both old and new regime. So this we have taken, and now we have total taxable income as same under both the regimes as 15 lakh. So now if you go ahead and compute taxes for this, so now if you can see under old regime, my total tax payable is coming to rupees 2,73,000. But under new regime, it is rupees 1,56,000 only. So now why this is happening is, although my taxable income under old and new regime are same, but still, if you can see under new regime, we have different rates. That means there are various combination of rates and also the income slabs. Under old regime, it is very less. And also, if you can see under old regime, as soon as your income exceeds rupees 10 lakh, you'll be taxed 13%. But under new regime, only if your income is exceeding 15 lakh, only in that case 30% will come into picture. So this is the major reason why we are getting a less tax payable under new regime. So now here what I can conclude is, if you are a person who is not investing in any of the investment option that we have, in that case new regime may be beneficial for you. But if you are a person who has invested in all the possible section, who wants to take all the possible deduction, in that case old regime may be beneficial for that person. But again, there is no hard and fast rule, or there is no thumb rule, so that is applicable for everyone. So here this is basically dependent on the individual cases. So here we need to see what is your income source, what are your income source, at which slab you're falling in, and what are the investment that you have done. So after considering all of these things, we will be able to tell you which regime may be beneficial for you. So now, having discussed about this, I will give you a walkthrough, a quick 5 minutes walkthrough of clear tax filing. That means if you want to file your income tax return from our clear tax website, so how you can go about it. And towards the end, I will also tell you the partner page that we have with Opportune HR. And also I will be telling you about the coupon code that you can use to get the maximum discount while taking our clear tax plan. So first, what you need to do is you need to click on, you need to visit our website, that is cleartax.in. Or towards the end, as I already said, I will be telling you about the partner page, so which you need to just click on it and you will be directed to our partner page so that you can take discount as well. So now, as soon as you visit our website, you need to either click on Get Started or ITR Filing. So either of this, once you click on this, you'll be headed to this account, which will ask you to create your account with the ClearTax. So now if you're already a previous user of the ClearTax, in that case, you just need to log in with your details. If you're a new user, in that case, you need to put your mail and also create a password. And after that, you need to log in. So once you do that, you'll be headed to this page, which will show you about the dashboard. So here in dashboard, we have told what are the steps that you need to follow. There are only 3 simple steps which you need to follow to file your income tax return. So once you click on Start Filing, you'll be headed to this page, which will ask you to put your PAN card number and also the date of birth. So once you put both these details, you need to verify it with the OTP. So once you e-verify it with your OTP, so your PAN will be linked with your ClearTax account, and also whatever pre-fill, that means whatever data is there in your income tax portal, there will be pre-filled data. So that you need to import. So once you do that, so all your data will be imported. So all your data will be auto-fetched. So after that, what you need to do is, if you are a salaried person, in that case, you need to upload your Form 16 here. And also we have an option to upload multiple Form 16s in case if you have changed your jobs in a year. So once you upload your Form 16, almost all your data will be auto-fetched. But I advise you to cross-verify your data, and if there is any updation that needs to be that is required, so you can do that also. So here you need to cross-verify it. First, you need to see whether all your personal info is reflecting. So under personal info, your name, your Aadhaar card, your address, your contact details, bank details, residential status, everything will be there. So once you cross-verify your personal info, you'll be headed to this page of income sources. So under income sources, you need to declare whatever income you're having in a year. So this can be under salary income, capital gain income, interest income, crypto income, anything for that matter. So everything you need to enter. So once you fill in all the details, you need to go to tax saving tab. So under tax saving tab, basically you need to enter what are the investment that you would have done under ATC, ATD, ATDD, or TDS has been deducted from your salary, so that some information will be auto-fetched from your Form 16, from your pre-filled data. If any information is missing, in that case, you can go on and add those details. After that, you will be headed to the last page, which is the tax summary page. So under tax summary page, there will be 3 things. First is you will get a PDF or a summarized data of all your income, your personal info, your tax saving, and also what are the tax that needs to be paid. So this is first part. The second part is you can also do a compare regimes. So now we have designed our ClearTax website in such a way that whichever regime is more beneficial for you, so that will be auto-selected. But still, if you want to go ahead and see which regime is beneficial, I want to do a comparison. In that case, what you can do is you can simply click on compare regime. Once you click on this compare regime, you'll get a data in a graphical format. So which will say you how much is your income under old or new regime, what are the deductions that are allowed, and how much is the ultimate tax payable under both the regimes. So you can do this for your reference. And also, if there is any tax payable, extra tax payable from your end after taking consideration your TDS and all, if there is any tax payable that needs to be paid, then you need to simply click on Pay Now. And once you click on Pay Now, you'll be headed to income tax page, wherein you need to put your details. We will also give you a challan here. So from that challan, you can take a reference of that challan and you can go on adding the details, and you need to pay your tax by using your bank accounts. So once you pay this amount, you will be headed to this page, which will ask you to pay the fee of the clear tax. That means whichever plan you have taken. So you need to pay the clear tax plan fee. Here you can use the code as well that I'll be telling you towards the end. So please use the code. And also, once you get the discounted price, you can click on pay and e-file. Before filing your income tax return, it will ask you a self-declaration, which is nothing but a declaration that you are giving that whatever information that is there, whatever information you have put, so that it is correct to your knowledge. So once you once you click this checkbox, and also once you click on the submit return, you will be headed to this page, which will ask you to e-verify your return. So here you need to e-verify your return by getting a OTP to your Aadhaar-based mobile number. So once you e-verify it with that OTP, you will get this pop-up which says your e-verification is successful. So once you get this message, that means your filing for the year has been completed and there is no other process that is pending from your side. So now this was about the process. So under clear tax, we have two different platforms. That is, either you can do it by your own self. That means you can file your income tax return by your own self. And this we call it as self-filing plans or the DIY plans. So here you need to purchase the plan, whichever plan is feasible for you according to your income sources. So you need to take the plan accordingly. So here we have different plan: basic plan, pro plan for the salary individual, and for capital gain also we have different plans. So depending upon the income sources, you need to take a plan. And for DIY plan, you need to enter all your details. You need to cross verify it, and you are the one who will be filing your income tax return. But if you want to go with the expert, so here expert will be a CA. So CA will be guiding you through the process. The only work that you will have is to upload all the documents, and we will do all the calculation. We will share the computation with you. The only thing that you need to do is cross verify it. And if you're okay with the computation, you can go ahead and file the return. So this is about the expert plan that we have. So if you have taken any DIY plan, and if at any stage, if you feel that you need an expert to help you out, so in that case, you can switch to expert assisted plan as well. So this is about the DIY and the expert assisted plan. So this is the partner page that we have with Opportune HR. So here I'll be sharing the link as well towards the end, and I'll be sharing the PPT as well. So here we have shared the link. You just need to click on the link and you will be headed to this page. And there is a coupon code also, which is CTPOPPRTN. So all caps. So you need to enter this code to get the maximum exclusive discount. And after that, here, if you can see, we have different plans: file with clear tax, get expert assistance plan. So everything is need to purchase the plan. You need to put this coupon code to get the discount. And after that, you can file your income tax return. So this was about the webinar. So thank you so much. So now we will have a 5 minutes of Q&A quickly. Let me see if there are any questions in chat or Q&A. So what you can do is you can start putting your questions if you have any. You can start putting it in chat box or Q&A section here. And we will be sharing the recording and also the PPT with you in some time. So our team will be sharing it with you. Okay, I can see no questions coming up here. So if you have any questions, you can just unmute your mic and ask. There is one question. Currently, I get 4.9 lakh package. Then is it applicable to me for tax? See, here if you are opting for new regime, in that case, you need to file your income tax return. So first thing is your income is exceeding the basic exemption limit of 3 lakh. So now what you need to do is you need to file your income tax return, but tax will not be applicable for you. So under rebate, whatever tax payable will come under rebate, so it will get set it off with the rebate and you don't have to pay any tax, but it is recommended to file your income tax return. Yes. Do we have any other questions or we can close the session? There is one question from one question that says for income under 5 lakh, old or new regime. So for income under 5 lakh, see under old regime also you'll get a rebate up to rupees 5 lakh if your income is up to rupees 5 lakh. And under new regime, however, you have 7.5 lakh. So any of the scheme, if you want to choose, it will not make a huge difference. So it's up to you. So whichever regime, if you want to opt for income up to 5 lakh, so it is up to you. So both the regime will be equally beneficial here. And you don't have to pay any tax in both the cases. So you have any questions, then you can start putting it here. I'll wait for like 2 more minutes. And if I'm not getting any question, we'll close the session. Okay, I can see no questions coming up here. So we will wind up the session. So thank you. Thank you so much for attending the session. Thank you.